This is our sixth day testing the martingale strategy. We started the past Saturday, 5 trading days, 5 testing days of the martingale. We had 3 winning days, 2 losing days. We'll keep on testing the strategy up until Sunday for us to be able to have a decent statistical sample. So by the end of Sunday, we will see out of those 8 days, how many winning and how many losing days do we have. That being said, keep in mind we are putting the martingale under heavy stress test. Since our balance, we are using the tournament to trade it and to test it live. So we are only starting with 100 points or dollars balance. The formula I'm going to show you works best and safe. It works safe if you have at least 400 or $500 in capital. It could be dollars, dirham, whatever. Since Pocket Options started using different currency pairs, so your local currency pair, whatever it is, it works best if you have 400 to 500. All right, but we will test it with 100. We will put it under heavy stress. This is how you should test any strategy. It's always tested under heavy pressure. So, and try to make yourself a decent statistical sample. 1, 2, or 3 days is not enough. You should shoot for at least 1 week, because think about it, after 1 week you will have more than 100 trades approximately on the strategy. So without further ado, let me jump to the Excel sheet and show you the details of this martingale. How does it work? And then we'll go back to the charts. We'll set up the charts together and start trading. So first, let me point this out. So our goal for today is to reach $25 in profit. Once we reach that level, we will stop trading, and um, the best situation is if you reach a minus 25 loss, you should stop as well. This is why I'm telling you this is a bit harsh for $100 balance. So that's 25% loss in case you lose the 4 trading cycle. So $25 for a $500 account, that's 5% only. So you can easily recover 5% without being under stress yourself as a trader. Okay, so that out of the way, let me go to the Excel sheet. The basics of martingale are, as you can see over here. So your cycle consists of 4 trades. The first amount is 1.2. If you win, you stick to this level. If you lose, you switch to the second trade. If you win, you go back to the first. If you lose, you go to the third. If you win the third, you go back to your first level. If you lose, you go to the fourth. And if you win this one, the fourth one, you go to the first stage. Now I will explain. These should be buy, sell, sell, or sell, sell. Look at this handwriting. Buy. I will explain how to define, how to start. Is it starting with a buy or a sell? I will explain this when we move to the charts. So by the end of the cycle, you will have $3.1 in profit. If you win the first one, you'll have 1.1. So you will actually recover the loss, your previous losses, plus that amount of profit. In this case, you will have $1.58 in profit, plus you will recover your first 2 losing trades, and so on. Now, I also created an Excel sheet to show you how you can actually compound your profits to reach your daily goal faster. So or your weekly goal as well. So starting balance is $100, right? So when you reach $25 in profit, 25%, so this is your first stage, you increase your trade amounts by plus 25%. Let me remind you, if you have any questions, please use the live chat box. Do not hesitate to ask any questions you might have. If you are new to the channel, please subscribe and smash that like button. It will help us a lot. You know, our goal here is to make a powerful trading team, all of us together. So if you have any questions, don't linger, don't wait too long, ask it. I'll answer it right away. So once you reach $25 or 25% in profit, you increase your trading amount by 25% in relationship to your first cycle. When you reach $150 in balance, so you also increase your balance by $25, you add 25% to this amount. Okay, so your total adds, let's say after this is your first stage, second stage, and third. When you reach the third stage, you will be actually adding 50% to your trading amounts in relationship to your first stage. So as you can see, here we started with 1.2 plus 50% since we have $50 in profit, that's a 1.8. So 1.2 plus 0.6, that's a 1.2. And this also applies to the rest of the trading cycle. Now, I made an Excel sheet that goes for up to $500 in balance, right? Again, I suggest if you have a minimum of 400 to $500, use these amounts. Again, these are relatively safe amounts for a starting balance of 400 to 500. Now, on Pocket Option, I have a surprise for you today. I have a present. It's a belated New Year present or Christmas present. If you join my team today, you can find my contact details in the description box. If you join my team today, I have a special bonus, deposit bonus for my traders, 100% deposit bonus. So if you don't have the 400 or $500 on hand, you can come in with 200 or 250 or 250 plus the 100% deposit bonus. You will have the 400 or $500 in your account for you to start with peace of mind trading this martingale strategy. That out of the way, let's move to the charts, set up the charts, and talk about the strategy in more details. Now, first things first, for strategy to work, you need to stick to pairs or assets that have at least 90% payout. In this case, it's 82, so you don't trade using those pairs. So let's add as many 92% pairs as we can to our favorites for easy access. Okay, lots of 92%, which is great. Let me see over here, and that's it. Okay, so this is your first step. Your second step is to locate a currency pair that has a clean and clear steep dive to the downside or to the upside. How what tools do we have to use for you to locate those situations easily and very quickly is to add the following indicator. Go to the indicators tab over here and select the zigzag indicator default settings. You don't have to change anything. So now you have this yellow zigzag line. The beauty of the zigzag is it will show you clear swing high and swing lows, and it will show you how steep your price decrease is or your price increase is on the chart you are looking at. So the perfect situation is to find something moving heavily, violent moves, if if not to the upside, to the downside, like this one. Second step as technical analysis is preferably if you can find a close supply area nearby or demand area, like for this case, you see you have tried to find a demand area close by, which is over here. So as you can see, you have your reversal to the upside happening over here after this steep decrease in price. You go to the left side, and here you go. You have your demand area. So what is a demand area? Simply, it's a location, it's a price point on the chart where the buyers kicked in and made a huge push to the upside. Okay, so these are your only technical analysis, homework you should do. That's the only thing. Now let me find a situation from the upside, something pushing violently to the upside, like in this case. You see the zigzag, beautiful. It shows you from the length of the zigzag bar, which is actually a representation of what's happening actually on the chart. This is a steep, very powerful increase in price. So your second step is to locate a supply area nearby where the sellers kicked in and dropped the price. If you find difficulty locating this zone on the 1 minute chart, go to the 5 minute chart. Let's see if we have a zone nearby. Yes, we do. So this is your supply area nearby. Now the adjustment I will do today, you don't start your martingale cycle at this stage. Why? Because the sellers are not yet ready to step in and push the price down for a reversal. So we wait until the price reaches this powerful supply area. Look at the supply area. It made a huge, powerful drop. This is where the sellers kicked in. So we have to wait to reach this zone and start the martingale cycle. Every single day I'm testing the strategy, I'm adding some level of confluence. We had two losing days yesterday and the day before, so I'm trying to I always do post analysis. So when I finish the live, I watch it again myself, and I see why did we lose in this case? Why did the cycle didn't go our way? What I noticed is when almost always when the price is over here, at some point it will reverse and go your way. Sometimes it will do a small push up and then go back to reverse. So today I will be strict on this. I will not start my cycle unless I see a clean candlestick pattern showing a reversal, or I will wait for push above the supply area, something happening over here, and the clear indication for a downward momentum. Can't we go for a buy here? It's gonna be a bit risky, Sarwar. Why? Because the chart the chart is a representation of the behavior of the buyers and sellers. Okay, so in this case the sellers are telling you that we like this price over here, we like to sell at this price or somewhere in the zone of this price. So there's a high probability that the sellers will kick in at this very same zone, especially if the buyers get weaker over here. You start seeing small candles, rejections, or if it starts somewhere over here as well, and you see like a violent push to the downside. So in this case, it's dangerous to go against this zone because you have sellers telling you, I will enter right here. Look at this move. So it's a dangerous play to play against those people. Let me show it to you somewhere else. Look, here you have a demand area. You see this demand area over here? zoom in a little bit. So here you have a demand area. Most probably, we will see a demand area close by in the past. Let's check this out. We are still on the 5 minutes chart, so let me check this out. Hold on. We have the line over here, okay. Let me go to the 15 minutes chart. See, look at this, beautiful. Come on. Look at this. This is where the buyer stepped in and pushed the price up after this very steep seller's momentum to the downside. And what do we have to the left side? Look at this strong, huge demand area. Buyers, acted in here like crazy. Look at this on the 15 minutes chart. See that? So the market most of the time, not always, it's not 100% of the time. The markets most of the time, they move in a cycle from one area to another. And from this area, they will move again to another area. Now, to give you an additional tip, usually, most of the time, so this is a very strong demand area, right? Usually the first test of this area, so when the price goes and does all those things over there and comes back to this area, usually the first test will be a reversal. Sometimes it could be a short time reversal, sometimes it could be a long-term reversal. If you see a third test happening, third time the price reaches the zone, now you have a 50-50 chance the sellers might breach it, and a 50-50 chance the buyers might step back again and go back to the upside. Hope this makes sense. All right. So today we explained the technical analysis side in full. Now let me show you how to set up your charts and expiry time. You need a 1 minute expiry time. So over here, the clock side, you select the clock and M1, 1 minute, you can change your expiry over here. So 1 minute chart, 1 minute expiry. And then you go to your, let me find, this is an 88% pair, so I will not trade this one. Let me find something else. Something that has a 92%. See, this is a strong demand area. Now it has been tested the first time. See the same demand area over here. It made all this push to the upside. Now this is the first test of this area. It already made the move. So I would rather, at this point over here, the probability for it to reverse again to the upside is 50-50, as well as the probability for it to breach and go down further. So I will refrain from trading on this one. I need a fresh zone. Look at this. This is beautiful. Look at this. Fantastic. Let me see if we have something on the higher time frame. Beautiful drop. See, we have a strong, fresh. It wasn't tested before. A strong demand area over here. Beautiful. Let me see. Let me move back to the 1 minute chart. Look at this massive drop over here. Massive drop. So let's set up the 4 charts on the NZD USD. Okay, we already have them on the 4. So let's set the amounts 1.2, 2.8. Always refer to your Excel sheet. So in this case, I already memorized those. 1.2, 2.8 for the next trade, 6.5 for the third, and 14.5 for the fourth. Now, since we have a steep increase in price, our first 2 trades are going to be buys. Second second, the third, and the fourth are going to be for a sell. See, it's rejecting exactly from the line. I will wait for the opening of the next candle. Beautiful rejection. And we will go for a buy here. All right, first trade for a buy. So let me activate auto scroll here. Only on the first two windows. All right, so beautiful push, beautiful, amazing. So this is our first entry. If we win this one, we stick to this level. If it loses, we go and trade this amount over here, also for a buy. If it loses, we go for a sell on this one. If it loses, we go for a sell. And if this one wins, we go back over here to the first stage of the martingale. 10 seconds left. Beautiful. That's a win. We go for the next second buy. Always keep an eye on the payout. The broker might change the payouts at any time. So make sure you are still on a 92 payout percentage pair. Let's see this one. You know this trade over here, see this one? This is actually a strategy you can use as a standalone strategy. So you have your powerful demand area to the left. For binary options, the best way to trade is to take 5 to 10 trades per day only. So this is a valid rejection trade. 1 minute or 2 minutes, you can take it easily. This is a strategy I will discuss next week, hopefully. Oops, I clicked sell by mistake, no problem. I clicked sell by mistake. This should have been a buy, no problem. If it loses, I'll go for this one, a buy as well. So I made a mistake over here. I clicked sell instead of buy. The buy is winning, actually. Buyers are winning. Let's see. I'll double up next trade, also for a buy. Okay, let's see what's gonna happen here. It's gonna be a win. Okay, we go for a buy. So if I didn't do the mistake, the last trade should have been a win. Now we'll go for a sell. If this one loses, we'll go for a sell here. Third stage of the martingale. We still have 20 seconds left. Let's see. So we'll go for a sell on this one. And that's a sell. 25 seconds left. I think this is going to be a loss. The buyers are very powerful. So if this loses, we will jump to the fourth stage, also for a sell. Okay, and that's a sell here. Now, exceptionally, if you lose this trade, you should stop trading. Exceptionally today, if we lose this one, I will double up on this amount for a buy. So once you reach the fifth trade, you go back to the initial stage of your cycle, buys and buys over here, sell and sell. So 20 seconds left. I don't see how this is gonna be a win. It's not gonna be a win. So we'll go for buys, two buys, right? Here we go. We need a decent push to stay in the game, or else we have to stop. By the rules, we have to stop. 14 seconds, come on. A small push can make all the difference. Come on. Okay, so at this point, what should we do, guys? We should stop trading. Now, for educational purposes, I will keep on trading to show you whenever you get out of your rules, what could happen if you keep on doubling. So I'll take three trades on this one for a buy on the next candle open, just to show you what could happen. You might win, of course. We might win the trades. But at this point, you should stop. You're already down. So your goal for the day are met to the downside. So let's see. I'll take three on this one. Okay. So why am I going for buys? Because we are still in the buying cycle. This is our second cycle of the martingale. So the first trade is a buy. We lost it. This is the second trade, so it's a buy as well. See how hard it is when you have small capital. Martingale can get you out, can liquidate your balance very quickly. So let's see. If we lose those, I will not end the live. You can still ask me any questions you want. You can discuss different strategies as well. No issues. So you see, whenever you break your rules, you will liquidate yourself. This is why I always start the live stream by telling you martingale is highly dangerous. So let's see how much time did it take for us to liquidate $100 balance. 12:40. We liquidated $100 in less than 10 minutes. So up to this point, we have 3 winning days for martingale and 3 losing days. We still have Friday, Saturday, and Sunday. We still have 3 days. So tomorrow, after tomorrow, and Sunday, I'll keep on testing the martingale. So that's it. If you have any questions, if you want me to discuss a different strategy, let's proceed. Now, this is something beautiful that happened here. Since over here, it's a strategy in itself. Yes, of course they will make profit because they are using martingale. So in martingale, you can lose the first trade, the second, the third, and win the fourth. So technically speaking, the fourth you are making money, you are already plus in profit. However, now sometimes they will do the first trade, the second trade, the third, fourth, and they will win on the fifth trade. So that's below 20%, that's below 25% win ratio. However, they can still be in profit because of the larger amount of this trade. So they recovered the losing four plus some profit. So that's why you can see even less than 50% and still making money. But is it sustainable over the long run? That's the point. The question, the important question is it sustainable for the long run? At some point, you can reach 1, 2, 3, 4, 5, 6, 7, and 8 losing trades. Do you have the appropriate amount in your balance to keep on doubling up like this? So if you're starting with with $1, let's say 8 losing trades back to back. First trade is $1. Second is 2, for example. The third is 4, 8, 16, 32. So now we have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7 losing trades. Your eighth is 64. And you will not be in profit, by the way. Exactly, 18% can make you money. So if you are using 8, if you are losing 8 times, even if you trade 64 at the 8th, you will not be making money. You need at least over here, you should be increasing to around $80 to be in profit. At least. And not that much of a profit. You will make around $5 to $10, let's say. So it's highly dangerous. It's risky. So let me show you something very beautiful that happened here. So you see on the 1 minute chart, on the 15 minutes chart, you have this beautiful demand area over here. So what you can do is you can draw a line over here or a zone. You can make it a zone if you want. Okay, and come back to the 1 minute chart. And once you see the price touching the line here, you can take a 1 or 2 minutes trade. That could be a strategy in itself. Same parameters. You put your zigzag, 1 minute chart, 1 minute or 2 minutes expiry, same exact thing. However, you don't do martingale. You take the trade over here. If it's a win, okay, you won your trade. In this case, if you have $100 balance, you can use 1 to 3% of your balance, 1 to 3% of your balance per trade. So $1 to $3. If you have a $500 balance, 5 to $15 trades. So you can browse the market for pairs, for currency pairs that have such a behavior happening. You check your 5 or 15 minute chart, you mark your demand or supply area, you go back to the 1 minute chart and you wait for the price to reach one of those two zones. And once the price reaches any of those two zones, you take a 1-2 minute rejection trade, we call those. Okay, because obviously if you are talking pure technical analysis, Look at this beautiful rejection and reversal. And it's still ongoing. It might, if it breaches this level, it's gonna keep on going up. So the technical analysis basis for the martingale strategy that we are using is extremely valid. So also an additional point, in this case, if you are not trading martingale, if you are using supply demand areas to take rejection trades like this one over here, you can adjust a little bit the payout. You can shoot for something for 85% payout and above, because on the long run, if you take, let's say, 10 trades per day, 10 trades, you have, at least you can win 6 out of 10. So 6 winning trades, you will be in profit. Remember, your goal is to end every day in profit, and end every week in profit, and end every month in profit. So this strategy can easily make 60% winning rate, as it works flawless. Look at this beautiful rejection. Let's see another rejection happening from a zone, for example. So look here. This is also very valid and beautiful. Look at this level over here. This is a supply area. The price reach over here. You took a 2-minute trade. You have a win. Okay? Give it 2 minutes for it to breathe. And look at this beautiful rejection over here. You see, here you have a demand area. The buyers rejected and made this move to the upside, right? When the price came back over here, look at this. See this beautiful rejection candle? 1 2-minute trades, you have a win. So supply and demand areas are extremely powerful for binary options. The zigzag will draw those areas for you automatically. So you will be able to spot those levels quite easily. Look at this over here. Look at this over here. See? This is a demand area. Boom. Huge push. So you have a buyer. You have a strong buyer over here. When the price reached that area, look at this rejection. It rejected for a short-term reversal to the upside. So this is your entry point. 2 minutes trade, you have a win. Even a 1-minute trade could have been a win in this case. See, so that's why you have to, don't rely solely on martingale. Up to this point, we have 3 winning days, 3 losing days for martingale. We still have 3 days left to test it. And also, let me mention that we are actually stress testing it a lot. We are putting this strategy under heavy pressure because we are starting with $100. With the amounts I am trading with, you should have $400 to $500. So that in mind, you should always be careful. Now, if you have any questions, please go ahead and ask before wrapping up this live streaming. I'll give you a few minutes. And also, just to give you an additional information, the first day I started the martingale, I traded it for 4 sessions. I made 4 sessions, around half an hour to an hour each. I was able to increase my balance from $100 to $600 using the same thing I'm showing you for the past 4, 6, 5 days. So when you have such winning days, always be conservative the days after. Don't be overconfident. Secure your profits and stick to your strategy. Okay? So martingale has its ups and downs. You should know how to manage it, when to stop. You should know when to stop trading. Okay, so since I have no questions from my viewers, let me wrap this thing up. All right, see you guys tomorrow at the same time. We'll continue testing this martingale until Sunday. Thank you for being here, Sarwar. Thank you for all those who watched the live. See you tomorrow. Bye bye.